Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows into the conventional fund business for the week ended April 17th, 2019. We'll talk a little bit more on ETFs as we go as well, but again, the first part will be just mutual funds only. Investors actually took about $54.1 billion of money out of the conventional fund business this week. As you'll see later on, it was primarily in the money market funds. But what we had was kind of an interesting week. The Dow actually for Wednesday time period was actually up 1.12%, but this is on very low volume, and investors remain really pensive still on where the economy is going, whether the stock market is going to continue up. There's been low volume and the like, and so this has really had an impact on flows and returns, and it's something that we're going to have to keep an eye on, the volatility, especially as we come in for earnings season. That's why people were so pensive. They've heard the reports that they expect the earnings reports for Q1 to be lower than expected, miss expectations, and I think people are just waiting to see what's going on. We actually had kind of a flip-flop. The first couple of banks that reported actually had really good numbers, and 2 days later, the second set of banks that came out actually had poor numbers. And so I think investors are kind of waiting to see which way the wind is blowing as far as earnings reports go. Let's go ahead, though, and take a look at how these news items actually impacted flows, and to start with our macro groups. If we take a look at it, equity funds lost about $1.8 billion, despite having, again, pretty big upside return for the week, 1.12% for the Dow, and a little bit less for the NASDAQ. Take a look at taxable bond funds. They took in about $1.6 billion. Muni bond funds took in a little bit less than $600 million. And then we take a look at money market funds, which I told you had $54.5 billion in outflows. And the reason we're taking a look at that and not really making a big deal is tax season. We see a lot of flows, seasonality, where people are pulling money out, paying Uncle Sam their fair share, and also people putting money to work back into equity funds and muni bond funds and the like. Well, let's go ahead and take a look now at a play-by-play for each of the macro classifications of their own. Let's start with equity funds. Looking at the equity fund arena, we see that they had a plus side return overall of only 0.16%, third consecutive week upside performance, but they had for the 9th consecutive week outflows, where we saw about $1.8 billion in outflows. How it panned out this week is domestic equity funds lost about $1.3 billion, 10th consecutive week. They've seen outflows and only had a slight loss, 0.02% decline. And it's the first week in 3 that they've actually seen a decline. But we take a look at the non-domestic side. We see that they lost $552 million as well, 4th consecutive week they've seen outflows, but they had a very spry 0.52% return on a weekly basis. So not too bad. 3rd consecutive week they've seen upside performance. If we take a look at the kind of play-by-play there, large cap funds actually saw the biggest outflows, $1.5 billion. And if we take a look at the international side of the arena, we see that international funds actually lost about $391 million out of their coffers. So not a lot to write home about there on the international side, other than that we are continuing to see outflows continue on for that as well. Let's go ahead and now take a look at the equity ETF side of the arena and see what happened with them. 3rd consecutive week, they've seen inflows, this time to the tune of $7.3 billion. SPY, Spider S&P 500, actually saw about $5.1 billion in net new money coming to their coffers. The Financial Select Sector Spider Fund took in about $865 million. And then if we take a look at the bottom side of this equation, Utility Select Selectors Spider Fund lost about $879 million, and iShares Russell 2000 lost about $803 million. But again, tale of two cities there. Retail investors getting away from, getting out of the way of the equity run, and authorized participants actually embracing this increase, even though on low volume in the equity arena. Let's go ahead and take a look now at the taxable fixed income group and see what happened there. For the 14th consecutive week, they took in money. $1.6 billion this week. It's the first week in 6, though, that we've seen negative performance, only to the tune of a drop of 0.12%. So not a really big story there. But what took in the big money was corporate investment grade debt funds took in about $1.4 billion, and high yield funds took in about $376 million. At the bottom side of this, though, we saw that flexible portfolio funds handed back about $106 million. Well, that brings us now to the fixed income portion and ETFs. and see what happened in that arena. If we take a look at this group, we see that they actually had inflows as well. We take a look at it, about $2 billion, almost a match to what they drew in last week. 6 consecutive weeks, they've taken in net new money. And if we take a look at the play-by-play, we see iShares 7 to 10-year Treasury bond ETF taking in about $451 million. The iShares U.S. Treasury bond, which was the top tractor last week, ETF taking in about $350 million. And on the downside, we see iShares iBox investment grade debt fund actually losing a little bit of money there, about $463 million. And then if we take a look at the one just before that, we see the iShares JPM United States dollar emerging market debt funds actually losing about $361 million for the week. Let's go ahead and turn our attention now to the muni bond funds. We have seen a run in munis, this time at about $593 million going into that group for the week, but it's the 15th consecutive week that we've actually seen net new money come into that group. And they lost a little money this week, down about 0.07%. First week in 12, they've seen negative performance, but again, not a lot to talk about on that one. We see high yield muni debt funds actually took in the most money, about $350 million, and then we have the intermediate municipal debt funds that actually took in about $274 million. And on the ETF side of the muni bond fund group, I saw just a slight increase, $86 million in net new money that came into the muni bond ETF group. Well, let's go ahead now and turn to our last group, and that is money market funds. Money market funds, as I told you, lost a bunch of money, $54.5 billion in outflow. But again, this is seasonality, seasonal flows. It is the fourth largest outflow that we've seen on record. But again, with tax season, people putting money to work into different asset classes and the like, we didn't find this to be too alarming. How it broke out is taxable money market funds lost about $50 million even, just a little bit less than $50 million. And how that broke out is the institutional investors took out about $39.3 billion, and we see the retail investor taking out about $2.7 billion, and then taxes that money market funds experienced $4.5 billion in outflow. Well, that's going to be it for us this week. I think most eyes, obviously we've been talking about the China-U.S. Negotiations going on and all the other issues. I think people are going to be less likely to look at economic news and even trade negotiations, and are really going to focus on the earnings season to see what happens in there. A couple of wins that we've had out there, I think we're about 60% of the reporters have actually beat their expectations, their lowered expectations, but we're only into the first week of reporting season, so we've got a long way to go, and I think that's what people will be paying attention to. Obviously, the markets are closed today. It's Friday, Good Friday. Both the bond market and the equity markets are closed. And so we're not going to have a lot of action, from today. Monday and Tuesday, we'll take a look to see what's going on and find out what the reporters are actually reporting for the time period. Well, I haven't done a deep enough dive for you. You can go to our website at www.lipperusfundflows.com, or you can join us next week when one of our analysts will talk about the flows trends for the week. Thanks for joining me. My name's Tom Roseen, wishing the best in your wealth planning and creation.